All right, good afternoon, everyone. There's about 17 minutes left in the cash session, and I've got a chart of Amazon pulled up here. And I got short Amazon going into the close yesterday and added to that this morning. It's basically flat at the moment, but has been down as much as like about 1.25% or so. And let me just, I kind of cleared the most of the drawings on this chart, and I was going to basically just do it live here and review why, I'm looking for a pullback here in Amazon. So running from the high back here at 2050 and a half to the low here that we saw on Christmas Eve. And you'll see we've run in, we've already crossed the 382 level and have ran straight into a 50% retracement of this high to low swing. And so that's just an area where you can see that, going back as far as really, hell, even this far back to the beginning of October, you can see that this level has, kind of held respect on both ends, both as support and resistance. And really, since October, it's chopped around this area. Now, back just a couple days ago, price never crossed this. Let's see, at least I don't think it did. 1663.25. Yeah, so, or no, excuse me. 1676.61. So just below that. So it's held this level pretty well. Now, if we run the high to low from the most recent swing, you'll see that this aligns basically right on top of that with the 786. So when you start, or at least when I start to see a confluence of levels like this, I look at whether that support or resistance as an area where a move can kind of terminate. So now if we change Fibonacci tools and move over to the, I believe it's called the extension tool in Thinker, yeah, so Fibonacci extension in Thinkorswim. So running from the low to the high to the low, it's basically giving you 100%, so a symmetrical move from this low to high, from this low to high. So we've made basically a symmetrical move here, and it's terminated this nice run we've seen over, the last week and a half, 2 weeks off the low here. So basically what I'm looking for is a pullback to the mean, which would be the 34 is what I look at. So they'd be around 1575 right now. And if we run from the low to high now from this current swing, so from high to low, if, this holds and actually it turns out to be the high of this swing, so that would be 1676.61, like I said earlier. And so I'm looking for price to basically terminate somewhere around here, 1575 to 1550, or at least for this trade. So that's a pretty healthy move down, but we've had just this straight move up. And when you see something like this, like we did before, it's not too uncommon, or it's not uncommon to see something, like this, where price is going to significantly pull back. Um, and this may be for the next move down. Which would probably be somewhere around, just shy of 1300. So anyway, I'm going to play this day by day, but I did sell call spreads with 8 days out and with, I can't remember if it's 10 or 13 days at this point. So let's just look at a few other things here. So this is the NASDAQ cash, and I've kind of stopped looking at, trend lines and things like this, but this is a descending kind of, or what there's so many names. I think it's like broadening wedge or some broadening descending wedge or something like that. But basically, when you have a descending kind of wedge like this where it's widening, this could be basically setting up for, a move probably to something like 68.50. But with such a big move up like this, and we have, stopped out at 66.43, so this from high to low here, the 618. I'm expecting somewhat of a pullback. Now, going into next week, we're getting into, I think, what will be one of the first kind of meaningful earnings sessions of the new year, which is Netflix. So on Thursday of next week, Netflix is reporting earnings, and I'm not going to, at least I don't think at the moment I'm going to put anything on here for Netflix. But one thing I wanted to point out is the weekly chart here of Netflix. So you can see that, from this high, 423.21, to the most recent low on um, Christmas Eve, the 24th, we're right into a 50% move, or a retracement of that move, and just shy of the 34 EMA, which is, right below the 618 of this previous swing. So from this high to this low here, look a little different on the daily chart, but um, with such an explosive move up like this, I just can't imagine that Netflix earnings are going to be received well. Now I could be totally wrong, and all of this that it's given back over the last few months. Um, maybe it's going to make some of it back pretty quickly, and that's typically how earnings are anymore, especially with like the FANG stocks or whatever's kind of popular, around that time. AMD, things like that. They're going to have these monstrous moves in one direction or other, and from a fundamental standpoint, they rarely make sense. You're going to see sometimes, and I talked about this a little bit yesterday, where um, a company can have great fundamentals and then just get hammered, and vice versa. So if if you're long or short, whatever, if you have a position on Netflix, it's always sort of, I think it's important to, just be very weary around earnings in either direction, just because it's so hard to play that, especially just directionally. Now, there are different strategies you can do where if you're playing options, as you get closer to earnings, volatility expands, and you can do different plays like that if you're buying, options well before earnings to take advantage of that volatility expansion. And the day after earnings, volatility collapses, and sometimes that's a good opportunity to to buy options, just because you're getting options at the cheapest price because all that IV is dried up. So this is definitely one to be aware of. So a week from today, Netflix is reporting earnings. So let's go through just a few of the other big names in tech. So here's Facebook, and Facebook is flat on the day basically. It's been sitting right on top of 142.02, this previous resistance, basically acting kind of like support. And let's jump over to Apple. And Apple just up a little bit here on the day. So, looking at Apple from the 195-minute chart, you can see there, it's bumped right up into the 34 exponential moving average, this white line here, acting as resistance. Um, like I said, I'm short Amazon right now, and typically with tech in the market as a whole, the way that Amazon and Apple go, goes the market, as we saw just last week with Apple dropping 9-10%. Now that was probably 3 times bigger than normal move for Apple, even in this kind of volatility. um, so that was just above average and just kind of a crazy event, and that kind of drug everything with it. But right now, I mean, we're seeing with volatility over the last month or so, things having on average, 2.5, 3, 5% days, and that's become somewhat of the the norm. So the last few days, volume has sort of dried up, as has the volatility. So let's look at the VIX while we're talking about that. So you know, kind of a consecutive day here where the VIX is just kind of, you know, kind of cooling off here, and it's broken through, and I don't ever really run levels on this. I did yesterday. Uh, the VIX is so unpredictable. um, I guess, and I've never really traded the VIX itself. I've traded ETFs that follow the VIX in volatility. But saw some guys say, why trading the VIX will ruin your life or something like that. And, with moves like this, anywhere, so right now it's at 1931, and just a couple days ago it was at 30, 3610, the high. Pretty crazy moves. But I don't really think that volatility is completely gone. I mean, I think we needed a bit of a breather here, but I'm pretty confident over the next couple days, and you can see that priced in already. So if we look at like the S&P here, so you can see that just in the next couple of weeks, they're pricing in. Actually, so next week volatility on the. Oh no, sorry, I always forget they have these weird weekly contracts on the SPX. So going into a normal kind of contract, so the January 18 contracts here. Yeah, there we go. So, the volatility is up to 17 on these, where right now we're currently at 14. So they are expecting, an increase in volatility next week. And I think I think Netflix is playing a large part in that. And I think depending on how it reacts, I think it's going to kind of lead the direction for most of the market next week. Netflix is still, a big player in terms of market cap, and even with just getting hammered. But I just Netflix is sort of a company that has debt issues. I don't know the specifics, and I don't really look at fundamentals. But I just don't think, and I've talked about this sort of exhausted the point, I think, if you've been listening. But from a bigger kind of fun type standpoint, big tech is not too appealing. And if this is in fact, a normal kind of bear market, this thing could last for a year and a half. And so really, I mean, I think, Amazon being my example, I think has found, sort of resistance and has terminated sort of this bounce. And I think, we're going to see lower prices in the coming days. And with, let's see here, I think Amazon had like a 40-point expected move. Um, so a 30-point expected move for the remainder of the week. And, at this point, we've done nothing. So, it's down a 0.25% basically. And so tomorrow, I mean, they're pricing in a pretty big move for tomorrow. And the volatility is pretty low. Now, going into next week, you can see that vol is jumping up quite a bit. So I just, I think I'm curious to see if, a lot of people have been lulled into the rally thinking like, okay, that was it. We had a rough December, but to me, there's just far too much indecision right now, just in kind of the geopolitical space, with, the China and US kind of tariff thing just lingering overhead. And I mean, I think there's a lot bigger things at play here. I think, just bigger cycles are finally unwinding. A lot of this all kind of debt involved. And I think, yeah, I mean, I definitely think we're due for lower prices coming up, and that's sort of how I'm positioned. So if we look at the other position I'm in, NEM, Newmont Mining, so this is a play on the metals market. So this one I've talked about quite a few times here if you've watched some of the videos and tuned into one of these sessions. There's squeezes on weekly, daily, really across the board, and this is a signal that I look at. It's a free tool here on Thinkorswim and available for a lot of other platforms. Um, but basically, it's just it's reflecting when price is consolidated for a while. And the way I was kind of taught and learned this is that this is when you're getting a buildup of energy, so to speak, in the stock. And when you get a green dot, kind of like you'll see down here on these lower time frames, like the 39 or 78, this is a release of that energy, and you get bigger than expected or bigger than normal moves. So only a minute left in the session, and Amazon, just because, like I said, I added onto it today, I think maybe down a little bit on the day here, and I only have 2 contracts, so or 2 spreads, I guess, so to speak. So, or I think 2, yeah. So, and NIM doing pretty good. Just picked that one up day before yesterday or yesterday. So I'm still holding on to that, and I think we're going to continue to see strength in the metals markets. And this, all is somewhat correlated where with, weak stocks or weak, equities, metals are typically going to be stronger. And because, Newmont is basically, is a mining company with strong metals market, higher prices means, more money for them. So that was the bell, and that's really about all I've got for today. A rather quiet day in comparison to what we've seen, over the last few weeks. But like I kind of showed there a moment ago, I am expecting to see, some more, a little more volume tomorrow, and probably some additional volatility with that, just with some of the bigger names having, um, you know, they're pricing in for bigger than what we've seen in terms of an expected move. So anyway, I will be back again tomorrow. So thank you for tuning in, and take care.